Okay, this video will cover what exactly are stop losses and take profits and how to use them and how to draw them and all that kind of good stuff. So let's get started. And I'll start with the stop loss, which I think is the most important when doing money management. And essentially, a stop loss is a limit of how much money are you willing to lose in a trade. So by setting a stop loss, let's say you are entering a position here, and this is a real life example of someone who lost a lot of money by this. You're expecting the price to go down after you see this red candle right here and set a trade that looks something like this. And you're expecting it to go short, so you are selling this pair. And instead, you can see that price went upwards. This person did not have any stop loss or any limit to how much money he was expecting to lose. So he held on to the trade for way longer than he was supposed to and lost about 2% of his account. It was 1.5%. It was somewhere around this area where he manually closed the trade because he thought the price will have gone the other way at some point. And boy, was he wrong. And so a stop loss is when you're entering a trade, you want to be setting a stop loss or when the price reaches that point, you're going to automatically close the trade and then not worry about it. So when let's say the price reached about 0.5% towards the other direction of where the trade was placed, the trade would have been automatically closed to prevent any additional losses. So this person would have lost about 0.5% instead of losing 1.5%, which is a lot more. So a stop loss in essence is whenever you're placing a trade, you set a price, let's say the price that this currently is. You can see it's 84 point, let's say 500. About when the price reaches that point, the trade is automatically closed, so you don't have to emotionally go through closing the trade and think about, oh, should I close this trade or not. Whenever the price reaches that, the trade is automatically closed to prevent you from additional losses. So setting reasonable stop losses will save you a lot of money in the long run. So this is what exactly a stop loss is, and the take profit is exactly the opposite. So let's say this person was expecting the price to be going downwards and set a take profit of around this price. So this person said the take profit to be around 2%, and whenever the price hit, let's say 82.400, the trade closed automatically. So a take profit is essentially allowing you to close the trade without having to emotionally go through closing the trade, because I've seen a lot of beginners thinking, oh, the momentum is with me, I should not be closing this trade, and end up seeing the price go the other way and losing money instead. So instead of being greedy, you always need to have a take profit to assure that whenever the price reaches a substantial amount of percent that you want to gain, just close the trade and move on with your life and do something else, or invest the capital that you have in a different trade. And now let's place a short position instead and see how that looks. So go here and select short position. You can see all the ranges and position that you can set through the trading view. You can have a look at that on your own time. So I used the long position before and I'm using the short now, and you'll see that it sets the stop loss above and the target below. I will set the take profit around the same area as before, so the same support and resistance. And you can see if I were to place this trade, I will have gotten at the exact right time. So you can see it reverted back, and you can see where the price is right now. And I will place my stop loss there, so you can see that there is no recent price around this area. So what I will do is, based on my rewards based on my take profit, I will set my stop loss, and I think that's about right, to be honest. If I'm risking 1%, it depends on how comfortable you are and how safe you want to play it. For some people, they want to be a bit more aggressive and set their stop loss really close to their entry. Some like to be a bit more safer and go as far as, let's say, 1 to 1, which is not something that I would recommend. I would recommend at least 1.5 to 1, so you get a nice reward to risk ratio. In this case, I will put a 2 for 1, so something like that will have been my trade, and you can see how this works. And so whenever the price reached here, it will have been automatically taking the trade out, getting you the profits, and vice versa. And let's say we set our take profit very far away, and we set our stop loss right here. The price never reached this area, pushed back, and hit our stop loss. So whenever the price hit this point, the trade will have been automatically closed, and you will have gained a loss instead of staying with the trade for a postponed amount of time. So this is what I wanted to cover. Stop losses are a way for you to not lose too much money into one trade, and take profits are essentially helping you not get greedy when trading. So that's all I wanted to cover for today. Hopefully you found this useful. If you did, like the video and subscribe. And if you have any questions or any recommendations for a video, do comment below. Thank you for watching, and have a good rest of your day. Goodbye.